In this session, we are going to work through question 2 from the October 2022 Edexcel International Advanced Level Unit 2 accounting paper. This question focuses on the statement of cash flows. We'll first begin with the provision for depreciation account. We start with the opening balance brought down on the 1st of October, 2021, which is $2,987,000, as given. Now, throughout the year, there were disposals of non-current assets. Let's look at the first disposal. On the 30th of April, 2022, a plant asset was sold. The question directly tells us that the accumulated depreciation on this asset was $265,000. Since this amount is being removed from the provision account, we record it on the debit side as a disposal dated the 30th of April, 2022. Next, we have another disposal on the 31st of May, 2022. This time, the question gives us the cost of the property, $999,000, and its net book value of $780,000. It does not directly give us the accumulated depreciation, so we need to calculate it. We know that net book value equals cost minus provision for depreciation. Rearranging gives provision for depreciation equals cost minus net book value. Substituting the figures. $219,000 is the accumulated depreciation relating to this disposal, and we record it on the debit side dated the 31st of May, 2022. Next, we enter the closing balance carried down. The statement of financial position shows a closing provision for depreciation of $2,766,000 at the 30th of September, 2022. This goes on the debit side as balance C/D. Now the debit side is complete, so we add it up. The total comes to £3,250,000. We place this total on the credit side. To determine the depreciation charge for the year, we compare this total with the opening balance already on the credit side. Taking £2,987,000 away from £3,250,000 gives us £263,000. This balancing figure represents the depreciation charge for the year, and is recorded on the 30th of September, 2022, the year end. One small correction before we move on. The correct date should be the 1st of October, 2022. The next requirement asks us to correct the operating activities section of the statement of cash flows. The junior accountant has already prepared the statement, but there are several errors that need to be identified and corrected. Our job is to spot those mistakes and fix them. Before we start, let's quickly remind ourselves what belongs in the operating activities section. This section should include cash inflows and outflows that arise from the day-to-day trading activities of the business. More importantly, we are interested in cash items. Any non-cash items or items relating to investing and financing activities should ultimately be removed or adjusted for. Let's begin with the first figure, profit from operations. The operating section of the statement of cash flows should start with operating profit, which is profit before interest and tax. However, if we look carefully at the question, we are told that the £412,000 represents profit after interest. That means we cannot use this figure directly. Instead, we need to add back the interest expense to arrive at the correct operating profit figure. So let's find the interest. Looking at the additional information, we are told that interest on the bank overdraft for the year was £11,000. We are also told that a £500,000 bank loan was taken out on the 1st of April, 2022, at an annual interest rate of 10%. Since the loan was only outstanding for 6 months of the financial year, we first calculate the annual interest and then time apportion it. The annual interest would be £500,000 multiplied by 10%, giving us £50,000. Since the loan was in place for only 6 months, we multiply this by 6/12, resulting in an interest expense of £25,000. Adding the overdraft interest of £11,000 and the loan interest of £25,000 gives us total interest expense of £36,000. Since the £412,000 profit is stated after interest, we add back the £36,000 to arrive at the operating profit figure that should be used in the statement of cash flows. This gives us an operating profit of £448,000. Next, we need to adjust for depreciation. Remember, depreciation is a non-cash expense. Therefore, it must be added back when preparing the statement of cash flows. There are two errors here. Firstly, the junior accountant has deducted depreciation when it should have been added back. Secondly, the depreciation figure itself is incorrect. The correct depreciation charge is the figure we calculated in the previous requirement using the provision for depreciation account, which was £263,000. Moving on, we have the profit on sale of a non-current asset. We can immediately see that the junior accountant has added the profit, when in fact it should be deducted. This is because the profit on disposal is a non-cash gain that has already been included in profit. The question tells us that there were two disposals during the year. On the 30th of April, 2022, a plant asset was sold for £311,000. The asset had originally cost £648,000 and had accumulated depreciation of £265,000. To calculate the profit or loss on disposal, we first determine the net book value. £648,000 minus £265,000 gives a net book value of £383,000. We then compare the sale proceeds with the net book value. £311,000 minus £383,000 gives a loss on disposal of £72,000. Now let's look at the second disposal. On the 31st of May, 2022, a property was sold for £935,000. The question already provides the net book value of £780,000, so we can calculate the profit directly. £935,000 minus £780,000 gives a profit on disposal of £155,000. This confirms that the profit figure of £155,000 is correct. However, the loss figure of £337,000 shown by the junior accountant is incorrect. The correct loss is £72,000. Remember the treatment: profits on disposal are deducted, while losses on disposal are added back. After adding back depreciation, adding back the loss on disposal, and deducting the profit on disposal, we arrive at an operating cash flow before working capital changes of £628,000. Next, we need to look at the working capital adjustments. Before making any corrections, let's first check whether the movements calculated by the junior accountant are correct. Starting with inventories, this gives an increase of £118,000, so the figure itself is correct. However, the treatment is incorrect. The junior accountant has added the increase in inventories when it should have been deducted. To understand why, think about what has happened to the cash. An increase in inventories means the business has spent cash purchasing or producing additional stock. Next, let's look at trade receivables. The balance decreased from £910,000 in 2021 to £874,000 in 2022, giving a decrease of £36,000. Therefore, the figure calculated by the junior accountant is correct. A decrease in receivables means customers have paid amounts that they previously owed to the business. Cash has therefore come into the business during the year. The decrease in receivables should be added to operating cash flow. However, the junior accountant has deducted the £36,000 instead of adding it. Therefore, while the figure is correct, the treatment is incorrect. Finally, we have trade payables. The balance decreased from £747,000 in 2021 to £713,000 in 2022, giving a decrease of 34,000. Once again, the figure itself is correct. A decrease in payables means the business has paid suppliers amounts that were previously outstanding. The decrease in payables should be deducted from operating cash flow. The junior accountant has correctly deducted this amount, so both the figure and the treatment are correct. There is one final error. The junior accountant has included an increase in current and non-current assets of 433,000. This should be removed completely, as movements in non-current assets relate to investing activities, not operating activities. Cash generated from operations is correctly calculated as 512,000. Now let's look at the final two adjustments, interest paid and tax paid. Starting with interest, the junior accountant has deducted £30,000. However, this figure is incorrect, so we need to recalculate it. From the additional information, we know that interest on the bank overdraft for the year was £11,000. We also know that a £500,000 bank loan was taken out on the 1st of April, 2022 at an interest rate of 10% per annum. Adding the overdraft interest of £11,000 and the loan interest of £25,000 gives total interest paid of £36,000. Therefore, the £30,000 should be replaced with £36,000. Next, let's look at tax. The junior accountant has added an increase in tax paid of £21,000. This is incorrect for two reasons. Firstly, tax paid is a cash outflow, so it should be deducted, not added. Secondly, the £21,000 has been calculated using the movement in the tax payable account, but that movement only tells us how much the liability changed, not how much cash was actually paid. The question does not provide a tax expense figure, or a tax payable account to help us calculate the exact payment. Therefore, the best evidence available is the opening tax payable balance of £305,000. This represents tax that was owing at the beginning of the year, and is assumed to have been paid during the current year. After deducting interest paid of £36,000 and tax paid of £305,000 from cash generated from operations of £512,000, we arrive at the final net cash from operating activities of £171,000. Now let's move on to the final requirement, where we need to calculate the net cash used in financing activities. A lot of students see the words financing activities and immediately start hunting for loans, share issues, or dividends. But before doing that, let's see if we can use the information we've already been given. The question tells us that cash flow from operating activities is £171,000 and cash flow from investing activities is £4,000. Next, let's determine the movement in cash and cash equivalents during the year. At the 30th of September, 2021, the business had cash and cash equivalents of £65,000. By the 30th of September, 2022, it had a bank overdraft of £11,000. Remember, an overdraft is a negative cash balance. So the movement is from positive £65,000 to negative £11,000, giving a decrease in cash and cash equivalents of £76,000. At this point, I like to use a simple equation. Operating activities plus financing activities plus investing activities equals change in cash and cash equivalents. Substituting the figures. £171,000 plus financing activities plus £4,000 equals £76,000. To isolate financing activities, we move the £171,000 and £4,000 to the other side using the logic of algebra. This gives us net cash used in financing activities of £251,000. The negative figure tells us that more cash left the business through financing activities than entered the business during the year. So the answer is a net cash outflow from financing activities of £251,000. And that's the end of this question. I hope this walkthrough helped you.